Okay, in this video, we'll continue our discussion of AUC Section 315 for understanding the entity and assessing the risk and material misstatement. In this particular video, we will dive into understanding the entity and its environment, including its internal control. And as we saw yesterday, we're required to gain an understanding of several different aspects of the business, from its industry and regulatory environment to the nature of the entity, as well as their accounting policies, objectives and strategies, and the measurement and review of their financial performance. And yesterday we talked about the industry and regulatory environment. So today we'll talk about the nature of the entity. And that's in AUC section 315.12b. And we see here that we're required to gain an understanding of the entity's operations, its ownership and governance structures, as well as the types of investments that they make, and the way that they're structured and financed. And so understanding each of these will help us to understand the class of transactions, account balances, and disclosures we might expect to see in the financial statements. For instance, with the operations, we would understand the type of entity and perhaps what revenue and expense accounts we might expect to see in an organization. For example, the accounts of a service organization might be a lot different than the accounts of a manufacturing organization. So knowing the operations of the entity will help us understand what types of accounts we might see. Also, the ownership and governance structures will help us understand the entity as well. With the ownership, we might be able to predict what types of related party relationships there might be. Also, we would know how formal the control environment is. If there's a formal board of directors, then we would expect there to be formal review policies and such. And that would help us to understand whether the owner possibly plays a large part in the management of the organization as well, and how closely held it is. Next might be the types of investments that the company is making. And this will help us understand what we might expect to see in the financial statements. For instance, if they are acquiring companies, then we might expect to see some goodwill, and we might expect to see some consolidation as well. And finally, if we understand how the entity is structured and how it's financed, we might be able to predict what accounts we might see. If the company's financed by debt, we might expect to see some type of maybe lines of credit or notes payable on the balance sheet. Also, understanding how it's structured would help us understand whether, for instance, if the type of entity is a C corporation, then we would expect we might have to do some work related to deferred tax liabilities or assets. But if it's an LLC or another type of pass-through entity, we might expect there not to be any tax expense or balance sheet accounts. But there are specific accounting standards for LLCs that we would need to follow. So anyway, each of these little bullet points help us to determine a lot about the entity under audit. So let's go down to sections A30 through 34 for some more color on how we might go about fulfilling this requirement. Okay, so now we're down in the explanatory material regarding the nature of the entity. We see here they've given us sort of a checklist to go through, which is really handy for us to use in gaining an understanding of the different aspects that we just spoke about. So from a high level, understanding the nature of an entity includes determining whether it's a complex structure. For instance, whether it's maybe one entity or there are a lot of subsidiaries and such. And if it's a complex structure, we might see a lot of complicated stuff, as you would expect. For instance, goodwill, joint ventures, other investments with specific purposes. And again, the nature of the entity would also tell us the ownership and relations between the owners and other people, as we spoke about earlier, potential related party transactions, which is in AUC section 550. But gaining this understanding helps us to be able to possibly determine those related parties now. So digging in detail, we saw a long checklist of things we consider when we're looking at each of the categories we mentioned earlier. So the operations, the investments, financing, and financial reporting aspects. So in your audit documentation, you might can have each of these items as a checklist and describe how each of them relate to the entity. So for instance, for operations, you've got the nature of the revenue sources, the conduct of the operations, for instance, different stages and methods and such, any alliances and joint ventures, geographic dispersion, location of all the facilities, various other things that would help us to understand operations of the company. Also the investments and investment activities, so planned or recently executed acquisitions and divestitures, investments in other things like securities and loans. For instance, maybe if you're a bank, capital investment activities, so maybe you have purchased new equipment or new warehouse, something like that. And then of course investments in other entities. So next, financing and financing activities. So maybe there are major subsidiaries, also debts or beneficial owners and related parties, or the use of derivative instruments. And finally, financial reporting. So knowing all of the other characteristics we just went through, we might understand what accounting principles and industry-specific practices we might have to ensure are being followed in the financial statements. For instance, if it's a bank or it's a pharmaceutical company, those would have specific accounting pronouncements that they have to follow. and also revenue recognition practices, fair values, foreign assets and liabilities, and also unusual or complex transactions. So, going through this checklist, whenever we are initially gaining an understanding of the entity and its control environment, we can just kind of go one by one through these and note how the entity under audit is represented by each of these.